Professor Michael Hudson and Dr. Norman Ehrentreich, who are both close to markets. Norman all the time, as in his job, and Michael, not in terms of watching the markets every day, but of being aware of the fundamentals behind. So, without further introduction, here are Professor Michael Hudson and Dr. Norman Ehrentreich.
Well, I thought that Stephen was going to say that I was a professor at the University of Missouri in Kansas City. So, I was going to follow that up with a statement by Missouri's former Senator Graham Best that's applicable to what's happened in Washington today. When they speak, they lie. When they are silent, they are stealing. But since Steve didn't introduce me as that, I can't begin with that quote. And instead, my friend Dan Sullivan, who you heard earlier this morning, suggested that I begin with a wonderfully appropriate passage from Matthew 18. Unfortunately, Bach did not include this in the St. Matthew Passion, but I think it's very appropriate to understand the political dynamics of what's happening this week. Then came Peter to him and said, Lord, how oft shall my brother sin against me, and I forgive him? Till 7 times? Jesus saith to him, I say not unto thee until 7 times, but until 70 times 7. That happens to be the Jubilee year, you may notice the 7. Therefore is the kingdom of heaven likened to a certain king, which would take account of his servants. And when he had begun to reckon, one was brought to him, which owed him 10,000 talents. But forasmuch as he had not to pay, his Lord commanded him to be sold, and his wife and children, and all that he had, payment to be made. Sounds pretty good for the hedge funds, huh? The servant therefore fell down and worshipped him, saying, Lord, have patience with me, and I will pay thee all. Then the Lord of that servant was moved with compassion, and loosed him and forgave him the debt. That's George Bush. But the same servant went out and found one of his fellow servants, which owed him 100 pence, and laid hands upon him, and took him at the throat, saying, Pay me what you owe us. I'm Countrywide Financial. And his fellow servant fell down to his feet and besought him, saying, Have patience with me, I will pay thee. And he would not, but went and cast him into prison till he should pay his debt. That's the Justice Department. So when his fellow servants saw what was done, they were very sorry, and came and told unto their Lord all that was done. Then his Lord, after he'd called him, said unto him, O thou wicked servant, and I forgave thee all that debt because thou desiredst me. Should not thou also have had compassion for thy fellow servant, even as I had pity on thee? And the Lord was wroth, and delivered him to the tormentors, till he should pay all that was due him. So likewise shall my heavenly Father do unto you, if ye from your hearts forgive not every one of your brothers that trespass. Where is the Christian coalition in Washington today about all of this? So we are not here, you know what Stokely Carmichael said, at least when I was young and working on Wall Street. Carmichael said, you're either part of the problem or part of the solution. We're not here to be part of the solution. We're here to be part of the problem and prevent the solution that they're trying to negotiate on Wall Street today. Now, there are a number, just to bring you up on the date, while you've all been listening to the lectures, we've been running out looking at the internet and seeing what's happened. And here's what looks to me like what's happening. The McCain Republic, when I came and was putting on my suit at 10:30 today, I had CNBC on, and they're saying, what a jerk McCain is. It's awful. He's stopping an agreement. He's grandstanding. And the Republican caucus in the House is stopping. Don't they get it? They're not trying to be part of the solution. Apparently, according to the Wall Street Journal this morning, what the Republicans have tried to do is indeed change the pulse and plan. They say if you're going to put in money, start with $250 billion, and you put it into a new bank insurance fund. They're not talking about the FDIC. Jamie Galbraith has said they should take the money and put it into FDIC and bail out the depositors, not the banks. But the Republicans say, no, you put it into a bank insurance fund that you'll create with an initial capital of $250 billion. This capital is to be repaid over a period, I assume it's 5 or 10 years, by just like the FDIC charges insurance to the commercial banks. This fund would charge the banks a fee proportional to their deposit base or their asset base, and even they could have variable asset requirements depending on how much mortgages they have, to reimburse the government for the $250 billion or up to $700 billion they put in. Now this way, everybody would be, the banks would be sharing in the risks that they themselves are creating in the process of making these exponentially growing debt loans. And if they want to pyramid, then let them pay more of the insurance. That would take the risk off the public, so that when, as one of the Professor Blaine said yesterday, the debts can't be paid at compound interest. The question is, who is going to pay? The banks themselves would have to pay, not the so-called taxpayers. Now, for purposes of this monetary conference, it's not really the taxpayers that are bailing them out. You know that they're not tomorrow going to suddenly tax us $700 billion. What they're going to do is the Fed is going to create the credit, the government is going to create bonds, and the government is going to exchange these bonds with the banks, with the others. This bailout credit is going to be purely government created. Now, if the government can create $700 billion to bail out the hedge funds and the risk takers and the wealthiest 10% of the population, why wouldn't it have the money to do a number of other things? For instance, Jamie Galbraith has suggested, as I said, the FDIC. I've suggested bailing out the PGBC, which owes $15 billion. 2% of the $700 billion bailout would bail out the Pension Benefit Guarantee Corporation, and which insures the private sector pension funds. Hillary, I'm going to turn over it in a minute to Norman to let him do his bit, and I'm going to go and read you what Hillary's wonderful bailout plan is. I very rarely say something positive about Hillary Clinton, but in the Wall Street Journal yesterday, she came out with an absolutely wonderful plan, saying this $700 billion, only a fraction of it, only $70 billion could bail out the homeowners that are defaulting and creating this so-called subprime crisis. All the government has to do is say you put a freeze on the so-called adjustable interest rates that they didn't know they were signing, and you reduce the value of the mortgage to the market value of the property. That way, if they do default, the property does have a market value now. And with 1/10 of the money, you keep the homeowners in their homes. By doing that, you prevent the homes from being vacant and abandoned and looted and all that. So why is there this idea that you have to bail out the mortgages and the compound interest curve instead of bailing out the actual homeowners who own the mortgages? Everything's backwards. The Democrat, now, this is, not only is it a good suggestion, but it puts Hillary in the very definition of evil according to every religion, including the Christian religion. Having said the right thing, she's doing the wrong thing, and the Democrats have universally today denounced the Republican plan, saying, no, we don't want to bail out, we don't want to make the banks pay, we don't want to buy the debts at market value, we want to buy them at the whole face value, otherwise you can't make the billionaires billionaires, and are they going to be unhappy? And if a billionaire is unhappy, we found that there are 2 little children of workers who are going to be unhappy because some billionaire's boy is going to beat up the children of these poor working class, middle class voters. Don't make these little kids be beaten up. Make the billionaires happy so they can go to school and have a good time. So it seems today that the Democrats are now talking about bipartisan solution. When they mean bipartisan, they mean paying off their Wall Street backers, the same Wall Street backers that are backing the Republicans until now. And amazingly enough, it's the Democrats that are on the far right of the political spectrum, the Republicans that are making a wonderful populist end run. And in the debate tonight, McCain could win it if he presses this point and said, I, McCain, the maverick, have stopped both parties from selling you down the stream, and I'm going to make sure that they don't do it. Somehow I doubt he's going to say it, but it could be a nice debate if he did. And to give some of the background, the mathematical and economic background of the bailout, I'm going to let Norman do his bit.
Thank you. Well, I'm glad I'm not a politician, so but I still have several personalities inside. So I'm split personality, and I let every personality speak a little bit today. So I want to give you a little inside scoop. How does it feel like working in the financial industry right now? So what personalities do I have? So on the one hand, I'm an academic. So I just love ideas. I love writing papers, and as an academic, I can put myself a little bit back, look from above at the situation, analyze it, and think, that's interesting. I could write a paper about that. So on the other hand, I'm a monetary reformer. So like the academic, I always put myself a little bit back and look at the situation, and I say, wow, interesting times, and then I ask a new monetary institute talk, is it worse enough yet? So, and the third personality, that's a rather new development for the last 2 years. So I'm an investment professional now. So I'm working at the center of the storm, and sometimes these three personality types, clash with each other, and so it's an interesting time actually to see, all these different goals and perspectives that you have, and you can kind of bring them together. So what does the investment professional sees right now? So the last year, so the financial crisis started about more than a year ago. So the first year, I said, well, this is an interesting time. So tremendous learning experience. So that was the academic and even the investment professional, so I wasn't really working on the trading floor. I'm an investment analyst, so I can go out on the trading floor, talk to my traders. They say, wow, that's a tough day today. We've lost again money. But I'm not really involved in it. I don't know exactly how many millions they've lost on that day. So interesting times. So then I chuckle at the idea, when you read an article and says, this was a once in 100-year event, so according to all statistics, this should happen just once in 100 years or even worse, and then you had a 1987 financial crisis, 1998 LTCM, September 11. So those once in 100 years events, they come every 5 to 7 years. So, but for the last 2 or 3 weeks, I have come to the perception, this may be one of those. So this is really bigger than the last ones. And if I talk to my colleagues, the traders, they say this really feels worse than what we've experienced in those last 20 years that they've been there. So that's kind of scary. So what has changed in these last 2 or 3 weeks, and that's, how does it feel like working now on the trading floor? So lightning struck us. So we actually had some tremendous losses on the company level when Lehman failed. So we held their papers for 13 months, and 2 weeks before they matured, so we were saddled with a loss of more than 100 million. So I don't know if anybody has listened to the news today. Yesterday, Washington Mutual failed. So we are holding those papers too, and actually the deal was structured in a way that the debt holders don't get anything back. So the recovery rate of that is close to zero for us.
You're going to tell us what to do?
The monetary act is being implemented in practice.
So Stephen, you know, my offer, you know, hinges on the assumption I will still have my job by next year.
I had asked Norman, you know, to help us out with all the, you know, being part of this class that's doing all the raping and pillaging there from the stock exchange, that maybe he could look towards us and help with it.
So and then, you know, those are not the only losses. So we had quite a few hits, and you know, then you wondered, I'm in the industry for 2 years, and I don't know exactly how safe my job is. So that adds a little, you know, layer of uncertainty there. But on the other hand, I still say tremendous learning opportunity. I still want to write the book. I thought, you know, it's going to be ready by the next time the financial crisis is around. You know, unfortunately, this seems to be the big one. So the financial landscape will have changed drastically. It has already changed. So we have no investment banks anymore. So the Glass-Steagall Act was already mentioned in this year. So maybe the Europeans did it right, you know, universal banking, now a division between commercial investment banking, so something to think about. So drastic change in the financial landscape. So actually, I'm neither commercial banking nor investment banking, so I'm working actually in the money management branch. So we collect money from individual investors and then we invest that money. So mostly we lose other people's money, but today the Washington Mutual shares was owned assets from the company. So still in a magnitude that we can survive this, but it's not nice.
Can we ask questions now?
Sure.
Just make one comment. Norman mentioned Glass-Steagall, and that's something I guess we should have talked about, because what people call the market, there are a million kinds of markets, and they assume that the market is something natural, not something that has been well crafted to produce exactly the result that it has produced. And that is 5 years ago, the wealthiest 1% only owned 38% of American wealth. Now they own 58%, according to the Congressional Record Service. And this was an intentional result. Last Sunday, I was interviewed by the BBC World Service, and they said, no, just before they called, the man was all upset he was stuck in the London tubes, as always happened, and said, now remember, Professor Hudson, most of our audience is Nigerian. They don't know what Glass-Steagall is, and by Nigerian he meant just, you know, they're not American. He thought and didn't want me to talk about that. And then he said, so, you know, we know that there's a language problem, so we have a British banker here, and the British banker was saying, well, I understand they're going to appoint a regulator in Washington. Isn't that going to solve all of the problems? And I said, well, it sounds good in principle, but what if the regulator is someone like Alan Greenspan who doesn't believe in regulation? All you have to do is put a deregulator in the regulatory position and then say, anyone else who tries to regulate, any of you 50 attorney generals of the states out there that want to bring criminal charges against Countrywide and its new owners, any of you other people that want to prevent the ripoff can't, because we have a regulator in charge and he doesn't believe in the regulation. So it's the law of, the Bush plan seems to me to be the law of the jungle, and it's everything, and the people who position themselves to eat everything are the top 1%. And when I say eat everything, by the way, we've been talking about usury and compound interest. The word for interest, take interest in Babylonian, in Sumerian, was to eat the interest. In other words, the creditor gets to eat this amount of money. So when we're talking about people eating everything, the desire of the wealthy to eat may be limited by their stomachs, but their ability to eat interest is infinite. Now we can take the questions.